Pay close attention. The IRS just released the 2025 tax brackets, and the changes are bigger than ever. So, whether you're earning a paycheck, running a business, or planning for retirement, these updates will affect your wallet. And if you want to be able to save more on taxes or avoid costly mistakes, you're going to want to stick around. I'm going to be breaking down all you need to know as it relates to the new 2025 changes. I'm going to be giving you examples. I'll be sharing with you tips and strategies to help you be able to come ahead. I'm also going to be unpacking the latest updates as it relates to the IRS. So we're going to talk about new tax brackets. I'm going to be sharing with you the deductions, the credits, and the limits with all the details that you need to understand and what these changes could actually mean for your day-to-day life. I'm also going to share with you how to be able to plan and maximize your savings and how to be able to avoid these common pitfalls when it comes to filing your taxes this year. So let's jump right into it. There's a lot to cover here as it relates to this. All right. So first, let's talk about the standard deduction, right? And what that means and what that is and how it can actually save you as it relates to taxes. All right. So we have what's called the standard deduction amount. And the standard deduction is essentially going to be subtracted from your total income that you're making during the year, right? So it's going to allow you to be able to reduce your taxable income. And the great thing about this, and one of the benefits of this, is you don't need to track specific expenses or even itemize your deductions. This is going to be a fixed amount set by the IRS. And as it relates to the updates for this year, the numbers are up. So that's great news if you are obviously going ahead and filing your taxes. So I want to go ahead and share quickly with you what these changes are going to look like and what this can mean for you. And it's going to be really powerful. So I'm excited for you to be able to see this here. So as it relates to 2025, if you are a single filer, it is actually going to go up to 15,000. So it's going to go up to 15,000. That's up from 400 from last year. So let's go ahead and do this. So standard deduction is up. So if you are single, it is going to be 15,000 for you. If you are married, filing jointly, that is now going to be 30,000, which is up from 300 from the previous year, which is actually 800 from the previous year. If it is head of household, now you're going to be at 22,500, which is actually up from 600 of the previous year. So to give you an example of this, to help really make this concrete for you, here's an example. Okay, so let's say, for instance, you are a single filer. So let's say you're single and you're earning about $50,000 annually as it relates to taxes, okay, in 2025. Let's say you make $50,000 in 2025. So here's how it can help you. So without standard deduction, you're basically going to be left at that 50,000. All right, so without the standard deduction, you're going to have to pay taxes on the full 50,000, depending on your tax rate. We're going to talk more about the tax rates here in a little bit, but that's what you're going to end up paying. With the standard deduction, now you're going to have that 50,000 minus the 15,000 up here, which was now going to give you 35,000 that is going to be considered your taxable income. And what does that mean? Why is that important to you? So it's actually going to give you a tax savings here. All right. So by reducing your taxable income, you're going to end up owing less in taxes. So if your tax rate, for instance, is 22%, that's going to be a huge savings for you. So 15,000 times a 22% tax rate, that's going to save you 3,300 in savings, which is amazing. All right. This is amazing for you as it relates to taxes, right? So that's why this is so important, to really make sure you understand this and really are keeping up to with this information. So when should you itemize instead of taking the deduction? That's a really common question I get as a CPA. So you might want to choose to itemize your deductions if your deductible expenses like your mortgage interest, your medical bills, or your charitable contributions exceed the standard deduction. So let me go ahead and break this down further. So in order to be able to take advantage of these itemized deductions, there's several things that you need to be aware of. So let's talk about itemized deductions. A couple of common ones that relate to many people: mortgage interest. So this is going to relate to you if you own a home. Medical bills, that is going to be deductible up to a certain amount. So it has to be 7.5% exceeding what's called your AGI. So if it's over, if the expenses are over 7.5% of your AGI, then adjustable gross income, then you're going to be able to itemize that. You have charitable contributions that you're able to go ahead and take advantage of as well, right? There's a whole list of them, so you can go ahead and look at that on your tax form, but these are some of the most common ones. So let me show you the power of this and why it's really, really important to double check to see if you qualify for this. All right, so let's say, for instance, you are married filing jointly. Okay, so you're married filing jointly, and let's say your combined income as a couple is 100,000. All right, and you have these deductible itemized deductions like I mentioned here. So let me go ahead and copy and paste this here, save some time. So let's say your mortgage interest on the home per year is what you're spending on is about 12,000. Okay, and then let's say the medical bills that you received for the year, again, it's going to have to be above the 7.5 threshold. That, let's say it's 10,000. Right now, you have charitable contributions. Let's say you contribute and make a contribution of about $10,000 during the year. All right. So now your total, say total itemized deductions is 32,000. So you're at 32,000 of itemized deductions, which is amazing. So here's the thing. Here's how you're going to determine whether you should be able to itemize or be able to have the standard deduction. So you see here, this 32,000 exceeds, meaning that's bigger than this new standard deduction amount of 30,000. So that's when you're going to want to go ahead and take advantage of this itemized deduction. So that gives you a $2,000 additional saving in taxes. So it's really, really important to make sure that you get the right documentation for this and you are staying on top of this to make sure that you're able to take advantage of as much as you can as it relates to taxes. Okay, so let's talk about some of the new changes as it relates to the marginal tax rates. So those have actually changed a little bit. So it's really important to understand this. So let's talk about marginal tax rates for 2025. All right, so marginal tax rates apply to the income in layers, or what they call brackets. Okay, so you probably heard of the term tax brackets. It's basically talking about these different layers of tax rates that we have here, right? So each portion of your income is going to be taxed at a different rate depending on the bracket that it falls into. So let's go ahead and talk about some of these tax brackets as it relates to single filers. So let's start with single filers here. Okay, so as it relates to single filers, we have these different tax brackets. Okay, so we have 10%, right, tax bracket, and that is going to be for income up to, so it's going to be up to a certain amount. So it's going to be up to 11,925 for 2025. Okay, so this is actually a change from last year. The next tax bracket that we have is going to be the 12% tax bracket. Okay, and that's going to be income from up. It's going to be income from 11,926 to 48,475. Right, that is going to be the next tax bracket. So income that exceeds that falls within is going to be taxed at that tax bracket and that tax rate. So then we have the 22% tax bracket. And the 22% tax bracket is now going to be for income from 48,476 to 103,350. Next, we have the 24% tax bracket, and that's going to be for income from 103,000 to 351,000 to going to now 197,300. Then we have the 32% tax bracket here, and that's going to be from income from 197,301 all the way up to now it is going to be 250,525. Next, we have the 35% tax bracket, and that's going to be related to income from 250,526 to 350. And last but not least, the highest tax bracket that we have here is the 37% tax bracket, and that's going to be related to income over 626,350. All right, so these are going to be the tax brackets that we have here, and this is what you want to be aware of as it relates to this. So breaking this down and explaining exactly what it is and why it's important, right? So to give you an example, so just imagine, for instance, you are a single filer and you go ahead and get your taxes done, and you're earning about $60,000 per year, okay? Single. All right, so you're single filer. Now, let's say you're making about $60,000 annually. All right, so first, the way this works, looking at these different tax rates, so you understand this. So the first 11,925 is going to be taxed at 10%. All right, so that's going to be 10%. So that's going to equal taxes of $1,192.50. All right, next, what do we have here? All right, so the next 36,550, that's going to be the next portion of your income. That's going to be 36,550. So basically what the way it works and how this is calculated, and it's really important to understand this. So it's going to be 48,475 minus this first tax bracket, which is 11,925. And like I said, it's going to be taxed at this 12% tax bracket. So that is how that's going to be taxed. And what you want to do here is then you want to multiply that tax bracket by the number. So it's going to be 12%. So the way it works is going to be the 36,550 times this 12% here. And that is going to come out to $4,386,000. Okay. So now we have the remaining. So this is going to be the difference here. That's going to be 11,525. So you want to do 60,000, which is the total income that we have in this example, minus whatever the next tax bracket is. So it's going to be this 475, okay, is going to be taxed now at that 22% tax bracket. So that's the next one. We talked about the 12. So now we have this 22% tax bracket here. All right. So now what you want to do, the math on this is going to be 11,525 times this 22% tax bracket. That's going to give us 2,535.50. Okay, so the total, looking at the total tax bill now for this individual, is going to be all of these numbers added up. Okay, so what you want to do is going to be this here, this here, and this here, right? This is going to be the total taxes. So you want to add these numbers up. So this is going to give us the 1,192.50 plus this 4,386 plus this 2,535.50 is going to be 8,104 in total taxes. Okay, and that is what that individual will go ahead and end up owing, right? So really key insight here is that your highest tax bracket doesn't necessarily apply to all of your income. Okay, it's only for a portion of your income within that tax bracket, if that makes sense. So the next thing that you want to be aware of are credits. Okay, and credits are amazing. So let's talk about a couple of credits that you need to be aware of for this upcoming season. One of my favorite ones, and one that is really going to benefit you if you qualify for, is what's going to be called the Earned Income Tax Credit, also known as EITC. Okay, and this is amazing for families. Okay, so the EITC is going to be a refundable tax credit, meaning that you can get a tax refund if you qualify for it. And it's generally speaking, it's going to be for people who are low to moderate income taxpayers, especially people with children. So this is typically the people who are going to benefit from this type of tax credit. Okay, so it's a refundable credit, means that you could be able to get money back even if you don't owe taxes. So to give you an example of this and help you understand this as it relates to the updates for 2025, they actually ended up increasing this amount, which is great for people who qualify for it. So the maximum amount for families, so it's going to be for families with 3 or more children, you could be able to get up to 8,046, which is actually up from last year of that 7,830 amounts in 2024. Okay, so the credits do phase out as you end up making a certain amount of income, but that is how that works. So to give you an example of this, so let's say, for instance, you are a single parent. Okay, so let's say you're a single parent here. Let's do example. So single parents, for instance, and with 3 children. So the way it works, and earning 25,000 annually. All right, so if your total tax bill, let's say you end up owing money on taxes, tax bill ends up being 3,000 at the end of the year, because this is a refundable tax credit. All right, so like I said, it's going to be the 8,046. So the way it works is 8,046 is bigger than 3,000. So it completely eliminates this tax bill. And now that tax bill actually turns into a tax refund of the difference between the maximum that you could take, which is 8,046 minus the 3,000. And that's going to give you a total of 5,046 as a tax refund, which is amazing. Okay, so this is amazing. So giving you another example here to help you understand this. So let's say, for instance, you are a married couple, or there's a married couple out there. So married. All right, and let's say with 2 children, earning 55,000 per year, you may still be able to qualify for a reduced credit. So it's worth, going ahead and making sure that that you go ahead and utilize the IRS's EITC calculator to determine whether you're eligible or not. but you can still be able to qualify if you're married, filing jointly with two children, right? So there's a really good tool out there that you can go ahead and utilize to be able to understand this. So the next thing here that we have as it relates to the updates for 2025 is we have the health FSAs and fringe benefits. So let's talk about this here and talk about how you could be able to benefit from it in this year. Okay. So these plans are going to allow you to be able to not only save money on taxes, but also help prepare you for the future. So you probably may have heard of an health flexible spending account, right? Also known as FSA, and it lets you be able to set pre-tax dollars for qualified medical expenses. So if you have expenses that qualify for this, it will reduce your taxable income. So here's some updates as it relates to 2025. So the contribution, the most that you could put here into these accounts is now going to be 3,000. It's going to be 3,300, and there's a carryover limit to 600, which is actually up from the previous year from 640. So now you're able to do up to 660 for the year, right? So to give you an example of this, to make this more practical for you, so what we have here, let's say, for instance, you ended up making the maximum contribution of 3,300 to FSA. If you are in the 24% tax bracket, then you're able to save 792 in taxes. So that is really, really powerful. Okay. So next, another update that we have here is going to be transportation benefits. And as it relates to transportation benefits, a lot of people are not necessarily aware of this, but it is a good benefit that you can know. So you can actually be able now to now deduct 325 for the year. So it's going to be for commuting and parking expenses that you're able to go ahead and write off as well. We have estate and gift taxes, and we have some new limits for these. So this is essentially going to be related to the estate tax exclusion. So if you're not aware, the amount is going to be that you could be able to pass down tax-free when you die. Okay, so this is going to be the amount that you're able to go ahead and pass on tax-free when you die. Then we have the gift tax exclusion. That's going to be the amount that you can give to someone annually without triggering what's called a gift tax. Okay, so let me go ahead and give you the updates on that as well. So if you qualify for it, this is going to be really important to be able to know as well. So the exclusion actually is up this year, which is great. So the estate tax exclusion is actually going to be up. It's this year, it's going to be 13,990,000. All right, so that's actually up from last year, because last year it was only 13,610,000. So that is one. And then we have the gift tax, like I mentioned. So that is excluded as well. And you're going to be able to exclude up to 19,000, which is up from $18,000. Okay, so these are going ahead and increasing. Majority of these increases, as you're probably aware, is because of inflation. So they have to keep up with inflation to make sure it's fair for everyone. So to give you an example of this, so let's say you give someone, let's say you go ahead and give someone 19,000, and you go ahead and give each person, 3 of your children, 19,000 in 2025. These gifts, right, are now can be given to your children tax-free and don't reduce your lifetime exclusion. Okay, so that is one of the benefits of being able to do that. All right, so that is excluded from taxes. So no one has to report it as income. Okay, so another thing that you want to be aware of is also going to be the foreign earned income exclusion. And that is going to be something for you to be aware of. So if you don't know what this is, this actually relates to an exclusion that you're able to get, which allows Americans living abroad to be able to exclude a portion of their foreign earned income from the United States. So they don't have to report this. So there's exclusion increases. So that is another benefit. So they've actually increased this amount, which is fantastic. So it actually increased to 130,000, which is actually up from 126,500. All right. So that is fantastic. And that is great. So to give you an example of this, so let's say, for instance, let's say you earn $120,000 abroad. Okay. So you live somewhere else and you make $120,000 in a different country in 2025. The entire amount can be excluded. So now this is going to be excluded because of this here, right? So that's one of the benefits. So the taxable income is going to be excluded, meaning that you do not owe any federal income taxes on this, which is going to be great. So let's talk about some tax planning strategies. I really want to make sure that you're able to go ahead and plan and save and be proactive as it relates to being able to do this during the year. So tax planning for 2025 is going to be key here. So a couple of recommendations that I have for you is, number one, you want to maximize contributions to retirement to be able to lower your taxable income. You also want to look into a strategy. And there's a whole bunch of retirement accounts out there. That's going to be your 401k. It's going to be your IRAs, individual retirement accounts that you're able to max out. You also, if you are an investor, there's something called tax loss harvesting. You want to be able to take advantage of that. That's going to help you save money on taxes to be able to offset the gains that you have on some of your investments. And then you want to make sure that you keep good records of your deductions. All right. So make sure you're keeping good records. So itemizing your deductions is going to be really, really crucial for you. So a couple of common questions that I get as it relates to this. So let's say, for instance, your income, what like if your income straddles between two tax brackets, what would happen? So only the portion of your income in the higher tax bracket is going to be taxed at the higher rate. So don't worry about that. A lot of people ask, should I be able to adjust my withholdings? The answer is yes. So there's an actual withholding calculator, IRS withholding calculators that you want to go ahead and utilize, and to ensure that you're not overpaying and underpaying in taxes. Okay, that's going to be important as well. Another thing people want to know is, are these changes permanent? All right, so these changes are not permanent. These are just adjustments that are indexed for the inflation, and they could be changed, right? They could be changed in future years. So just know that. All right, so that is really the power of being able to take advantage of this and utilize this, right? You have the power to be able to save money now. You can act now. So whether it's adjusting your withholdings, you're planning for deductions during the year, or you're taking advantage of some of the credits I talked about for 2025, these tax updates are going to be an opportunity for you to be able to optimize and maximize your finances. If you found this helpful, make sure you go ahead and like, subscribe, share it with someone. I'll see you next time, and make sure you go ahead and watch this next video. Take care.